Yeah, welcome, ladies and gentlemen. Very exciting today to announce a new partnership on our panel with Midkey. And I sit here with the infamous Richard Young that's going to talk to us all about it. Why don't you introduce yourself, mate?
We're very, very excited. As one of the co-founders and co-CEO of Midkey, we're very, very excited to join the SFG panel, obviously one of the leading aggregators in the Australian market, and we're hoping that it's going to be a fantastic long-term partnership. And we've got a really interesting story to tell on why we're sort of very complementary to some of your brokers' existing lenders that they use, and where we're sort of like a bit of a Swiss Army knife or a new tool in the toolbox for the broker to solve their customers' problems.
Lending's been around for thousands of years. It's really rare that we see such a unique product that assists so many Australians. So why don't you just tell us what Midkey is?
So Midkey, we saw an issue in the Australian market where you've got people with significant equity in their properties that were unable to access that equity via traditional lending because of loan serviceability constraints under APRA of all the lenders. So we spent 18 months designing the Midkey loan product, which has two elements that solve this issue of loan serviceability for the consumer. And they are, the first one is there are no monthly payments. And the second one is our loan is repayable based on events rather than a 1, 5, 30-year duration. And the reason why that's important is because we do test for serviceability on the Midkey loan. But when we test, we're testing for 0 monthly repayments and an undefined term of the loan, and so therefore the number we test for is 0. So what has that enabled us to do, Blake? The extraordinary reaction from the direct-to-consumer market has been that 80% of our loans to date have been second mortgages. So again, people are servicing their first mortgages, wanted additional debt, maybe wanted to reduce some of their first mortgage. We were able to step in there and get a deed of priority with the first mortgage lender, no problems there, and lend that additional capital either to free up additional funds for things like renovations, starting new businesses, school fees, etc., cost of living, or because some people in this cost of living crisis have had issues where they want to reduce their first mortgages because they want to reset the amount of their monthly repayments. So the flexibility of the Midkey loan in terms of the use cases to either extract capital or to solve for cash flow issues for borrowers is really, really unique.
So you mentioned about second mortgages there, but you've had great success going as second behind many lenders. Is there anyone that won't accept this product?
No, I think from a regulatory standpoint, most of the banks have to accept second mortgages. So no, we haven't had any issues at all. All of the major we've got deeds of priority with. So we thought initially, wow, this is going to be interesting to how that process is going to work, but it's actually really, really smooth. And some of them are turning them around in 24 hours, but generally speaking, getting a deed of priority out of a bank, Priority Mortgage Bank, is sort of anywhere from 1 to 5 days at the max.
This is your first foray into the broker channel, which is exciting.
Yes.
And we're thrilled to have you in an inaugural partnership. But tell us about your average client. What's the average deal size and what do they need the money for?
Yeah, great question. Midkey, key to unlock your midlife in our tagline. So the average age of our borrower is about 54. They've got very high credit scores. Or I might say 830 is our average credit score of our borrowers. The average size of the loan is around just over 500,000, so decent sized loans. And remembering, there's probably a Sydney skew there from that in terms of the price of real estate in this part of the world. But as I go back to, the wonderful thing about Midkey is we're not prescriptive about how people use the funds, i.e. do they want a renovation and do they want to finish a renovation that already started and can't get additional money for? Do they want to consolidate credit card debt or, dare I say, ATO debt or other business debt? Do they want to provide liquidity to their business? Do they want to help their kids get into the property market? Do they want to fund school fees? All of these use cases are Midkey use cases. So think of it like the amazing thing is to change the way that the consumers and the broking community look at that house. We call it the store of wealth. And historically, it's been really hard to access that capital from, unless your income is up super high, so then you can go and get a traditional equity release product. But a lot of people, you know, the value of their properties has gone up significantly more than their incomes. So they're sitting on all this wealth that, unless historically they sold the property, they're unable to tap into. That's the change of the game that Midkey brings to the Australian consumers through brokers and through SFG.
Very interesting, and my ears pricked up when you said renovation there. So just as an example, you know, I've got my $1 million debt to a bank or a lender.
Yep.
I desperately want to do a renovation because I've got a new kid on the way or whatever it might be, kitchen, bathroom, etc. I'm a little bit tight on servicing on my existing debt. Could you give me a couple of $100,000 to get those renovations complete?
Let's just use an example that your property was worth $2 million and you had the $1 million first. If you are running tight on your first mortgage, we can lend up to 35% LVR as a first, up to 30% as a second. So let's take that scenario up to a combined level of 76. Let's take that scenario of $1 million. So that's 50% LVR. If they said, look, I'd like to reduce that down to say 800, just a little bit more, we could pay down that, but also lend another 200,000 in cash, so a total of 400,000, and that would be, if you think, what's that, a 20% LVR for the Midkey, so the 200 you're paying down and the 200 you're releasing to finish your renos, do your renos. And a lot of people, the interesting thing about renos is you think about so many people, particularly real estate agents, you know, saying, well, if you could just do these few things to your property, you could sell it for 3x what you do. And a lot of people say they don't have the money. With Midkey now, they can do that as well. So, yeah, we've found a number of instances of where people are using their Midkeys, growing families, for instance, as you say, like adding another bedroom or just dressing it up for sale. One of the other things that where you're adding value to your property and you use that $200,000 for the renovation, we will do an as-is and an as-if complete value by the independent valuers that we appoint, such that they will say, well, if you do spend that on bathrooms or a kitchen, we will give you that valuation uplift in terms of the striking value that we strike for the purposes of the calculation of our deferral fee as a feature of our loan product. So we're not, in our returns to our investors, we're not double dipping on the returns. And if you'd like me to sort of take you through a simple example of how that deferral fee works, because it is a key feature in our loan, I'm happy to do so.
And just with your interest, obviously there's an interest rate applicable.
Yep.
But, you know, I want $100,000 for 2 years.
Yep.
Let's just say the interest rate's 7%.
Yep.
Do I get charged interest on interest in the second year? Or?
Yep. So no is the answer. So one of the features of our loan, and it enables us to lend to borrowers of any age in greater LVRs or over the age of 18, is because of the simple interest feature. So because, you know, you said $100,000, say for 7 years, $7,000, $70,000 interest. So there's no compounding. And that was a key element that when we got our exemptions from ASIC to design the Midkey loan, that we were able to, for instance, lend at a 35% LVR on a first mortgage to a 20-year-old if they wanted to, because you're doing simple interest. Whereas traditional, say, if you compared it to, say, a reverse mortgage, they can only lend to people over the age of 60, and then at the age of 60, they could only lend to a 20% LVR. So we can lend to younger borrowers a much higher LVR as a first or a second. So really interesting. So that category was sort of midlife, but we have done loans for people who are over 70 as well.
So at the moment, you can only get accredited through SFG. Great benefit to us, of course.
Yeah.
So how do you get accredited with Midkey?
We've got a QR code that anyone can sort of, if we're at an event, say at an SFG event, there'll be a QR code which will enable the broker to notify you guys at SFG. You will then send us their details. we will then create a file for them, and there'll be a very simple accreditation process around watching a few videos, reading our product guide, and we have to do a small little test though, Blake, and we'll make sure you go through it first so it's appropriate.
Yeah, well,
and you've got to get 8 out of 10 right.
Yeah, well, luckily I don't need accreditation,
So the process is simple, and we'll sort of, after people are accredited, we'll run webinars, sessions. So if people just want to run scenarios by us, we're very happy to do that. We're very excited about it. It is a new and interesting and very, very different product in the market. So we understand it'll take a while for certain members of the broker community to get really up to speed of just how flexible and how complementary and sort of the ability to grow the broker's business by thinking more broadly about how they could use a Midkey with their customers.
Oh, we're bloody excited by it, mate. We think that there's going to be a number of brokers pulling out the bottom drawer, the ones that they couldn't help historically.
You told me this. We better make sure this happens.
So hopefully we get some volume through the door, because I think it is an incredible product. It's incredibly innovative, and it's poised to help a number of Australian consumers, particularly in a tight residential market where prices are really lofty. So you're to be congratulated. Richard, thank you so much for spending some time with us, and congratulations. Welcome aboard.
Good on you. Thanks, Blake. We're very happy to be on board.
Good stuff.